Hello and welcome back everyone. I am CA Harsh Mehta welcoming you to a new video. Many of us hold long-term shares in our portfolio which are sitting idle since a long time. What if I tell you that there is a way to earn an extra income or additional income from those idle shares? Yes, there is a way by which you can earn additional income from your long-term portfolio. Securities lending and borrowing is a legal mechanism wherein you can lend your shares to other market participants and charge a fee in exchange for that lending. There are two basic parties involved in this transaction. The first one is the lender, and the first one is the borrower of the security. Let's first understand the lender's perspective. A lender is the one who is giving its securities to another person and charging a fee in exchange of that. Let's take an example. Let's say that you have Reliance share which you don't intend to sell in the near future. And let's say you have 505 shares. This number is basically the lot size in the derivative market of Reliance. So that is where it came from. And let's say that you lend it at rupees 10, then for that period of time, you will get 5050 from this Reliance shares as an additional income. This 10 can vary based on the market supply and demand and the prices that are prevailing in the market. And so this way, the lender can earn additional income from the same investment and the same number of shares. Now, let's understand this transaction from a borrower's point of view. What's in it for a borrower? Why would he want to borrow a security from another person? So, borrowers are majorly the arbitrators who are looking to profit from the mispricings between equity and futures or options. Or they can be someone who wants to carry a short position. So, let's take an example. Let's say that shares of SBI are trading at rupees 250, and the same shares of SBI in the futures market is trading at rupees 240, which is at a discount. Usually it's the other way around. The future market is at a premium. Let's say if it's 250, then it should be 255 or 260. Now, as it is at premium, an arbitrator sees the opportunity of mispricing. So what he will do is he will buy the future at rupees 240 and he will sell the spot of SBI in equity market for rupees 250. And at the expiry date, both the prices will converge, and wherever they will meet at a particular point. And this 10 rupees is the profit for the arbitrator. Now, for carrying this equity position, a short position in equity, the short seller has to have a share with him for carrying it. So this is where the SLB comes into play, and someone would borrow the shares so that they can carry their short position. The next question that is coming to your mind is it safe? So yes, it is completely safe. Just as in the case of derivative market, even in the SLB market, there is a clearing corporation in between the borrower and the seller, with which the borrower and lenders deal. So NSSCN is the clearing corporation for NSE, and BOISL is clearing corporation for BSE. They both take proper margins from both the parties to make sure that the contract is honored and it does not fail, whether on the borrower side or on lender side. But there is one risk where if the borrower fails to deliver the securities on the date, then the clearing corporation will use the borrower's margin to buy the securities in the open market and deliver it to the lender. The risk here is that this transaction is basically treated as a deemed selling transaction, and STCG or LTCG will be applicable to the lender because the deemed selling transaction will be covered by the tax laws. One can only deal in those securities which are listed in futures and options segment. So not all the securities are available for trading in SLB program, but only those which are listed in FNO segment. The period of these contracts vary from 1 month all the way up to 12 months, and one can choose as per their needs. One can also withdraw from the transaction before the last date of the contract, bearing a small fee, whether by a lender or by a borrower, whoever is the paying party. The next question that comes to the mind is, if I lend the securities to a borrower and at that time, if there is a bonus or a dividend announced by the company, then what will happen? So, in this transaction, technically the borrower is the owner of the security, but it is deemed that the lender is always the owner of the security, and thus all the corporate action, be it bonus, rights issue, or dividends, all are passed from the borrower to the lender at the time of settlement of the contract. And so there is no risk of losing out on the corporate action of the companies. Both lender and borrower have to bear a fees charged by ISSL and also the fees or brokerage as leviable by their broker. One important thing to note here is that one has to own a share worth rupees 10 lakhs or 20 lakhs to enter into the transaction. As we saw in the example, the lot of Reliance is of 505 shares and the price is 2000. So if you have 505 shares in your portfolio, only then you are eligible to even enter into the SLB market. And so it is not for small traders. Overall, it is a really good method of earning extra money from your idle portfolio, and one should surely give it a try. I'd like to conclude this topic over here. Catch you in next video. Thanks.